Thank you, Nicolai. Great introduction. My name is Alexander, and just a quick warning. I spent the whole weekend at a meditation/yoga retreat, so I'm very sinful and I'm very at peace. So as I start using weird words like bliss and meditation and stuff, please just bear with me for a while, right? It's a quite an abrupt morning to wake up to 5,000 people and on stage talking. So I hope it goes all right. Cool. So my name is Alexander. I work for PreSeed Ventures as an investment manager. So my job is to find early stage companies, interesting companies, and invest in them. And afterwards, we work with our portfolio companies to make them grow as fast as possible and the best way as possible. Before we dive into, so today I was going to talk a bit about what we, as an investor, look for in an early stage company when doing an investment. And then afterwards, a bit about the approach from you are looking for funding, you get funding. And some do's and don'ts, some tips in that process. Before diving into it, though, I would like to briefly explain to you who PreSeed Ventures are. We are an early stage investor. We do tickets from all the way down to 500,000 Danish kroner. And all the way, our typical ticket is around 3 million Danish kroner. So it's at the pre-seed stage. We've been around for over 15 years doing the same stuff, so we know what we're doing. And we invest in what we call scalable companies with huge potential. More specifically within the tech and software industry, also some hardware, some medtech, and a bit of moonshots, so the crazy projects. These are some of the companies that we've been invested in along the way. You might know some of them, but yeah, we've done some good bets once in a while. All right, cool. Nicolai also briefly wanted me to explain where we fit into the ecosystem, because we are not really a VC, but we're an early stage venture fund or an investor. So we go in, right after the angels come in, or together with some angels, and then our main purpose is to kind of deliver the startup to a Series A funding. So we're in that sweet spot in between, and we're usually the first institutional investor in. But yeah, there might be some angels or before or together with us. From a company perspective, it looks a little bit like, you have an MVP in the market, you have the first couple of customers, you have a little bit of data on how these customers are using your product. Your team is maybe 2, 3 co-founders, and maybe the first 1 employee. All right, cool. Diving into it, right? So all investors kind of look for the same stuff. It's here divided into 5 categories. You could find other categories, but I'm going to stick with this one. And it's all about the team, as Nicolai also covered. It's about the market that you're addressing with your product. It's about the product and the value prop it delivers. And it's about the scalability of the business model that you build around your company. And lastly, it's about the sustainable edge long term. So I'm going to go into these one by one. And I'm going to wait with the team because it's by far the most important, as Nicolai was also talking about. Cool. So what do we look for when we say we look for a big market or a VC market? I was trying to explain it by an example. So we once did an investment in an ebook company back in the days. And this was kind of like the rationale behind that investment at that point, right? So the book market in Denmark and in Europe is fairly large or pretty big. Back then, the ebook penetration was very low. But other places, like in the US, you had seen that the ebook trends were kind of taking off, right? And in Denmark, the competition was very scarce, and the same in the rest of Europe. So that could lead to the conclusion that there could be, a potential for a big company within the ebook space in Northern Europe or Europe in general, right? And hence more feeble. So what we are looking for is a market that's huge or will be huge in 10 years, because it's easier to build a big company, which we are aiming for, in a big market or growing market. We then look for mega trends and timing. So is everything pointing towards that your solution should be the winning solution in the coming years? And in the end, we always look at the competition landscape, right? So are there big corporates doing the same? Are there other startups entering the market? How well funded are they? And all these kind of things. Cool. So moving on, product and value prop. yeah, it's going to be a lot of threes, right? It's also 3 points on the last one. It's also going to be 3 points on this one. So yeah, we look for superior products, which is easy to say, but what does it mean? We have a rule of thumb, which means it says it's 10x something, right? So 10x cheaper or smaller, bigger, faster, more efficient. The idea is that an incremental change is not going to be enough to be a category winner on the long run. So we need something that is a superior product. Then we look for user love to your MVP or the product that you're building. There are many ways to show this. Cohorts and user analysis and all these are some. But could also be users that share your product with their peers, or even maybe some word of mouth, or brand ambassadors and all these kind of things. And in the end, we look for traction. We are an early stage investor, so when we come in, we don't always see, or you don't always have traction, so don't despair. We also invest before it actually starts to take off. That's our role. All right, that was product and value prop. Moving on, scalability. So it's all about the business model, right? So if you want to build a really big company within 10 years, it has to be scalable. So it has to be able to turn up the tempo pretty quickly. So these are 3 things that we look for within the business model. So organic growth is awesome if you have it. It's typical for communities and similar. So now here it's Tonsa, it's one of our investments. It's a football community where the one football player shares your product, the product with all his teammates, and then you got organic growth. It's a very easy way of growing because as soon as you get one user, you have multiple users. Then we look at the sales model. So can you repeat the sales that you already done? So do you actually understand the model, and can you turn it up? So can I scale it up and do it faster and at a big scale? So do you understand the steps, the funnel? Do you understand the customer journey, and can it be turned up? And then in the end, we also look for customer acquisition cost and lifetime value and a lot of other numbers around the customers. And it's all because we want to see that there's money behind actually scaling up. We have another rule of thumb that says you should, of course, make money on each sale, hopefully, but also that your customer acquisition cost your lifetime value should be 3 times your customer acquisition cost. So we have all these different metrics that we look for, right? Scalability. Cool. Moving on. Sustainable edge. So when your company becomes very big and is successful, why are they not just going to be a big corporate, copying your play with a lot of more money than you have? And we look for these sustainable edges. So for the long term, how you're going to defend your successful business. A typical one within the software industry is network effects. So for example, within data, if your product becomes better, the more data you have, then the more customers you have, the better product, and it will be easier to win the next customers. So it's kind of like the snowball effect rolling, where you, in the end, when you're very successful, have a lot of customers, it's going to be difficult to compete with you. Then there are also more classic ones like IP, branding, economics of scale, and similar. Does it make sense? I'm talking too fast or anything? No? All good. Cool. Then the team. So yeah, it's the most important one, but also the most difficult one to explain what we actually look for. Nicolai was covering it a bit, but we have a saying in our place that we would rather invest in a B idea with an A team than an A idea with a B team. It's also what Nicolai was going at. And when we meet a new team, we look for kind of this purpose and big vision. So do they actually want to make a dent in the world, make it all the way to the Trustpilot stage, right? Then we really want to see, hopefully we see complementary skills. So 3 business people from CBS is not going to build a great product. You need different roles, right? So we like to see somebody, that can actually build stuff with some technical background, or and then somebody that can actually maybe sell the product, and maybe somebody with a bit of strategy experience and know-how from the industry. So these complementary skills. And then get shit done, yeah. Now, it's all about you have to move something from A to B in different ways than have been done before. So it's can you actually execute and get from A to B? It's not normally always the easiest thing to do. So execution, find new ways, be innovative in the way that you build your business. Cool. That was kind of like the main 5 categories that we look at. I'm now going to jump briefly into
Yeah.
Good time.
3 minutes.
Into the process and some do's and don'ts in the process, right? All right, so this is just me putting up some steps. There could be other steps, and you could divide it up to different categories. This is just to have something to talk from. So let's say you start over here. So you have a company, and you think that you should have investors in to scale your growth. And then over here, you actually secure the funding, right, for your startup, and you get on to building a cool startup. So first of all, I would recommend you to start out by actually getting to know the investors and the VC model. So there are multiple books and blogs and videos about this. So to get to understand why, how they make money, how they therefore evaluate your company, how they will push you going forward, what their aim is, right? So understand the player that you're working with before actually starting. And then seriously ask yourself if a VC or an investor like Nicolai and us are the right path for you, or organic growth might be a better path for your business. Cool. Moving on, Nicolai touched briefly upon this. So shortlist your targets, right? I once in a while get emails like this. Mining company in China seeking investment. We can only invest in Denmark, and we do not do mining operations. So yeah, shortlist your target. Nicolai was also covering this. Sorry for the repeat. But all investors do not invest in everything. So they have different sectors that they look at. They have geographies they look at. They have especially also stages, right? So we are pre-seed seed stage fund. There are Series A funds. There are growth funds. There are different funds for different parts of your journey. So make sure to target the right investor. Also, different investors have different investment theses. Some really like software as a service products. Some really like communities and B2C cases, and some really like the hard deep tech and all this. So make sure that you find the relevant investors. Cool. Then when you found investors, of course you want to present them with something, so you should create your material. This, of course, mainly being a pitch deck, but also kind of like a financial model behind what you're aiming for. I'm not going to go in depth with pitch decks because there's a lot of material online, so look into that. But what I will say though is that remember, the pitch deck is not to tell everything about your business. It's mostly to get us and other investors interested in your company, so you can actually get to meet us and then build a relationship from there. So it shouldn't be too long, but also not too shallow. And then remember, it's a narrative, right? So you want to tell a good story. You want to say the world was this way before, and then we came in, and now the world is this way, and it's much more awesome, right? So get a narrative in there where you are kind of like the hero of the story. And then last point here, we often see this. Please give us 30 million, but we really want to hear, how you're going to spend the money, and we can't invest 30 million. That's another point. But how you're going to invest money, where will it take you, what will the runway be, who will be the investor after us, and all this. So have the whole plan ready when coming up. Introductions, yeah. Don't shotgun your pitch deck. Don't get all the Danish investors and then just send one common email to everybody, looking for investments. We get these once in a while, and we want to feel special, right? So we also people. We want a little bit of dating going on. If you can, towards introductions, if you can get a warm intro, it's by far the best. So use your network. Get somebody to vouch for you a little bit, to do that introduction. So it just starts at a better place. If you can't get a warm intro to somebody, find them at an event like this. Come say hi to me after, or the other guys at the PreSeed Venture booth. But try to get an intro. A cold email, of course, if you have no other options, is the only way forward. I'm just stating that it doesn't work that well, but it can't be the only option, of course. But again, it's a bit like dating. You want to start that interesting stuff going back and forth, right? Cool. So now you have some introductions to some investors, and then going back to what Nicolai said, it's about creating lines, not dots. So we are not going to invest in you the first time we meet a startup. We're not going to say, here's our money. We really want to build a relationship and see how you actually build your business, how you live on the promises you state, and how do you work from whenever you see a defeat or the growth is not as fast as possible. So try to build these relationships and entertain us for a long time, because we really like to see the kind of like the growth of your company a bit and get to know you better. So build that relationship. Yeah, once in a while we see these, and then we're supposed to invest in June, and they state July is going to be awesome, and that rarely happens. So be realistic with your goals, and then entertain us for a while. Cool. So now you have your intros. You are starting to build relationship with all the investors. Where do you go from there? You want to create momentum to actually get to the end of that funding round, right? So how do you do that? And it's a little bit difficult to nail down, but again, if investors are only people, so and we invest in people, so if you can get some FOMO going, we don't want to miss out on a good deal. If you can somehow hint that there are other players in the game and other people are interested, we will sometimes move a little quicker. And then, but in general, for this last part, don't play too hard, right? So now you got us interested, and we want to work with you guys. But if you end up pushing too hard for something, or even saying something that's not really true in the pitch deck and stuff like this, we have to work afterwards. So once we do an investment, we get a really close working relationship. And if you push too hard in the beginning, it can hurt the relationship on a longer basis. So remember, it's a people's game, and slowly grow that trust, as Nicolai was talking about us. Cool. Lastly, after you have created the momentum, hopefully you'll get to term sheet stage, and you'll have some offers on people who want to invest in your company. Then the diligence will typically start, and they will look a bit more closely to your startup. And then in the end, hopefully you'll get to the funding stage. On this last slide, and then I'm done, sorry. Two things to say: keep the momentum all the way to the end. So I've sadly seen people that get to the term sheet stage, and then we have an offer, and then everything kind of slows down, and sometimes it just runs into the sand. So keep the momentum high, and keep all the way to you actually have the money on the account. Otherwise, it can sometimes run out, which is sad. And then the last point to make: it doesn't seem that long, but it takes a lot longer than you think. So please just start earlier than you think, and reserve some time for it, and treat it like a pipeline. Have multiple dialogues going at the same time. Cool. So that was our view on what we look for at an early stage investment, and some tips and do's and don'ts to the process of getting there. That was about it for me, Nicolai.